Welcome to the Get Real Podcast, your high-octane boost of full-on reality therapy for personal, business, and investing success with your host, Ron Phillips, because somebody's got to tell it like it is.
Hey everybody, welcome back to the Get Real Podcast. Ron Phillips here. Another year under the belt. And I want to talk a little bit about the 2025 real estate market and my thoughts on National Association of Realtors and Redfin and everybody who's come out with their forecast for 2025. What I think that means for you as an investor, what it means for all of us as investors, and kind of go through the numbers and just, there's probably some outlier things that, may or may not happen. We don't really know yet. I'll go over those things as well. Let's jump into it. National Association of Realtors. I mean, it's I don't know that any of this is going to come as a super shock. Mortgage rates have affected home sales. Short-term lending has affected home construction. For sure, because the ability to finance construction has really been problematic. Couple that with a really divisive election cycle. I think typically every 4 years when we have a national election, everything kind of slows down. People don't know what to expect. They don't know what's going to happen, and because of that, they stop making decisions. And stopping making a decision is literally making a decision to not move forward with anything. So typically, after a presidential election and there's some certainty about what's going to happen, there's a bump. And I'm not even sure it matters. I'm not even really sure it matters who wins, honestly. I mean, I think this year it certainly mattered because of some of the things that were slated to be on the losing side implemented, which I think would have harmed the economy, which would have slowed things down even after a bump. But I guess we'll never know whether that's true or not. I do think we're already feeling a bump in positivity in the market. We are experiencing that through December and through the first part of January of 2025. The National Association of Realtors, they point out in their forecast that the last couple of years have been pretty difficult, specifically for realtors. There's been a purge in realtors, and I don't think actually. If you actually looked up the numbers of how many people have renewed their licenses, probably not down that much, but activity, like people who are actively in the business of being a real estate agent or broker, certainly down because it's more difficult to make money now. You actually have to know what you're doing. You have to really work hard. And most realtors, shocker, don't do that. So, anyway, housing market for 25 and 26. The outlook says higher home sales and then moderating mortgage rates. Now, I would caution that moderating doesn't mean reduction. It doesn't mean that interest rates are going to come crashing down. I don't think that's going to happen. I think they're going to remain in the low to mid sixes. I mean, we might see a high fives maybe, but I don't think they're going to go crazy. I just really don't. So I think when that starts to level out, that also gives, kind of going back to the election where there's uncertainty. When there's uncertainty in the rates, people make decisions based on what they think are going to happen with rates. And as I've said on previous podcast episodes, people who think that the interest rates track whatever the Fed decision is, it's just not how it works. And, when the Fed signals way out that it's going to reduce rates, sometimes that means mortgage rates come down. But typically, if they do, it means they come down already and they're baked in by the time the actual Fed rate cut hits. And people wonder why in the world the Fed rate cut didn't have any. Actually, sometimes the mortgage rate goes up instead of down when the Fed cuts the rate. So anyway, I don't think any of that is really going to affect the market this year, because I think the rates are going to be kind of what they are. We might see a slight drop, along with a slight increase. And I just don't think it's going to make a whole lot of difference. But home sales are predicted to rise, which is interesting, because we've heard all of these reports about how home sales are going to drop because of affordability. And listen, affordability is an issue. It absolutely is. I will look up for us the home. Well, I'll look it up in a minute, and so that I get the name exactly right. But 2025 sales projections for existing homes to rise 9% and new homes to jump by 11%, which I don't think a whole lot of people were talking about. I honestly don't. I mean, it's a lot of people talking about, potentially a crash that people have been talking about since 2018. And I just don't think that's going to happen. I do think that home prices are going to moderate. I mean, I think let's look at what the National Association of Realtors says. They're even saying that home sales in 2026 are projected to rise year over year. So after a jump in 2025, another jump in 2026. Let's see. They're talking about interest rates. I don't know. They don't know nobody knows what's going to happen with interest rates. I already told you what I think is going to happen with interest rates. Home price increases. Here we go. Home price are going to slow. Now, they say slow. So here's the thing you need to pay attention to. Anytime people are talking about on the news, talking about statistics, here's what happens. What they'll do is they'll report the appreciation, which they're saying in 2025 that they're going to be up 2% over 2024. And so what you'll hear reported on the news is that if appreciation was 12% in 2024, which I don't know if it is or not, but if it was, to make math easy, if it's going to be 2% next year, they'll say there was a 10% drop in appreciation. And what everybody will naturally think is, oh my gosh, prices dropped 10%. That's not even close to what happened. If this holds true and prices go up 2%, well, that means that they went up 12% the year before and 2%. That's 14% in 2 years, or averaged out, that's 7% a year. Okay, so you really have to, and the headline will be home prices drop 10% year over year. You read down into the article, you will find they actually didn't drop. What happened is the appreciation rate dropped year over year. Now, the government does this too with spending, right? They'll say, these guys are cutting 10% out of the budget. No, they're not. No, they're not. They're cutting 10% out of the growth rate of the budget, which still means you get more money this year. So it's all you words mean things, people. Words mean things. So pay attention to what people are saying. So let's read to this. See, more buyers are skipping the mortgage with sizable housing equity gains. Many owners have experienced. All cash buyers have surged to record highs, accounting for 26% of home sales over the past year. And, this is fantastic. I love this. So they had a mortgage. They had a ton of appreciation over the last many years. They're taking the gift that was given to them. They're taking that cash and they're going and they're buying a home for cash. Now they don't have any payment. What a wonderful thing. I think that's a fantastic I think it's a fantastic thing for those people who are able to do it. First-time homebuyers are getting older. We see this in the investment world. This is crazy. Our typical investor over the last 20 years has been a 45 plus, most of the time closer to 55 plus person who doesn't have enough money to retire and is trying to catch up. They're really focused on retirement. Over the past 8 years, what we have seen is that the age is skewing much, much younger. Down into the mid-20s to the mid-30s, we're seeing people invest in real estate now. These younger folks they're saving their money, they're investing, and they're doing it at a much younger age than my generation did. And so it says here that the median age for a first-time home buyer was 38, and it's dropping, and they're buying, and they have more money. So I think that's going to add to the reason for the prices to continue to go up, and for most importantly for the sales volume to go up. Let's see. Single women. Now, so this is an interesting one. I'll share it with you. I don't think it's going to make a huge bearing on the market, but a drop in marriage rates has triggered more consumers to enter the housing market on their own. Single women held a 24% share of the home purchase market over the past year. Single men, it was 11%. Now, we could have a whole lot of fun trying to figure out why that is. I'll just say my opinion on this, and that is that women mature quicker, and therefore, because they most likely save money better than men earlier in their lives. They have more money, and they're investing it, which is a wise move, ladies out there, wise move, because more millionaires have been made. Man, we just talked to a guy the other day. The only thing that this guy did in his whole life was buy a house. He's a multimillionaire. That's all he did. Just bought a house, paid it off over time. Multimillionaire. Super. I mean, real estate's so much fun. So much fun. All right, let's take a look at this home affordability monitor, which is this is fun occasionally. I've done this in the past. You guys can go see this we'll put a link in the show notes to it, but it's at the atlantafed.org. You can look it up. HOAM, Home Affordability Monitor. You can go in here, and actually it's really cool. You can so it has the whole country and the affordability rates of the whole country. The index looks like it has changed, so this is so interesting. Okay, I'm going to have to do a show on this. This entire graph has changed because the affordability numbers were dramatically different. So I'm going to have to see what they've done here. Somehow, homes have become more affordable. This is very interesting. Okay, so home affordability index, if you recall, 100 is the mean. Below that is unaffordable, and above that is very affordable. Okay. Today we're sitting at 71. So still unaffordable for most people. Medium home price at $392. And of course, these are always behind. This is information from August of 2024. So the Fed is always behind on this report. But as I look back, where in the last few years was the least affordable, which, if my memory serves, I think was down much lower than 68. Now the low is 68 over the last many years here, all going back to 2023 when things started to go crazy. And then if you go back to 2005 and 2006, which was the least affordable, 67 was the lowest number. So were basically equal, they're saying, to back then. But man, I want to say these numbers were different. But I'm gonna go in here and read about this, and I will report to you in another episode. But even 71, so we've spiked from 68, 69 back in May and June, and now in August, all of a sudden it's 71. So we're headed the right direction, and I think that's going to continue because interest rates are 6.5% where they were 6.9%, and then at the lowest they were 7.6. I mean the highest interest rate, but the lowest affordability, they were at 7.6, which makes sense. And crazy enough, the house prices have gone up. So I'm going to have to dig into the underlying data in here and see what's gone on. But the good news is affordability is up. And if affordability is up in August, it should be up now because the interest rates have actually come down just a little bit since then. Not much, but a little bit since then. Fascinating chart. You should look it up. It's really fascinating. We've been as high at the height of affordability was in 2012 at 116. Same in March of 2013. Those are the two high points. And, that was back when we were at the bottom of the market. And interest rates were like 3.5%. So both of those things together combined make it incredibly affordable for anybody to buy a house. And we basically stayed affordable. We didn't go under the median line until April of 2021. I mean, and then we just kind of fell off a cliff in 2022 when the interest rates shot up. So anyway, that's what's going on with the real estate market. And I think affordability is going to continue to be an issue. However, because of our lack of construction over the last over a decade, we're going to continue to see house prices probably mellow out, but still go up at a very nominal pace. And if people are getting back in the market, which they are, we're going to see more properties turning. But we don't have a ton of inventory still, and because of that, we'll probably maintain on prices. So, what does this mean to you as an investor? Well, it means that the people who've been predicting that we're going to have a crash since 2018, if you listen to them, they've cost you a small fortune. And if you continue to listen to them, they will continue to cost you a small fortune. Because as we have stated on the show a multitude of times, there are 4 returns when you buy real estate on leverage. And you don't need appreciation to do really, really well. It is the market gift. And when you get it, which if you bought property in 2018 when they told you not to, you would have had a really big gift by now, really big. And those of you who did buy in 2018 or 2012 or 2013 or any time in between there, you should be doing something with that market gift. It is a big, fat gift. What that means is that gift over the next many years is probably not going to be as good as it has been over the last 10 to 15, 20 years, but it's still going to be there. It's going to be slight. I'll remind you that, they're saying 2% nationally. So look at the pocketed areas where you're investing. A minimal 3% return when leveraged into real estate is still between a 12 and a 15% return on your invested capital based on the leverage that you are that you're using. So whether you're putting 20% down or you're putting 25% down, it's remarkable what happens. So a small, tiny little, what seems to be insignificant amount of appreciation, because that appreciation rate is calculated on the full price of the property, full value of the property, not the 20% that you put into the property. It's a remarkable return, along with cash flow, along with principal reduction, along with tax incentives. All of this stuff stacked up, even in times like this, is a really, really solid return. and safe. I was just listening to one of the calls that we had with one of our clients, and he was saying on the call, look, I want to do something with my money that's in the stock market at an all-time high. I want to put it in something safe, and I believe real estate is the safest place. And of course, we definitely are in agreement with that. It is an awesome place to store wealth. It's also a great place to build wealth, but it's a fantastic place to store wealth. And on that happy note, along with a happy new year, get out there and make something happen.
This has been the Get Real Podcast. To subscribe and for more information, including a list of all episodes, go to getrealestatesuccess.com.